Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin is currently trading at $71,448, while Ethereum sits at $2,201. The market is splitting into two distinct camps, and this structural divide could determine where we're headed next. Bitcoin has held remarkably stable between $65,000 and $73,000 for weeks, despite extreme fear environments. The Fear and Greed Index spent an entire month between 8 and 14, the most sustained extreme fear period in years. Yet institutional buyers kept the price floor intact. Here's who's been buying. Strategy accumulated 4,871 Bitcoin on April 5th and now holds 766,970 total coins. US spot ETFs absorbed 50,000 Bitcoin in March, though inflows slowed to just $22 million last week. These buyers represent mandated positioning rather than discretionary speculation. On the other side, whales holding between 1,000 and 10,000 Bitcoin have reversed dramatically. They accumulated over 200,000 coins, but have now distributed 188,000, one of the most aggressive large holder distribution cycles on record. Mid-tier holders slowed accumulation by 60%, and miners liquidated 19,000 Bitcoin in a single week. Even Bhutan sold 70% of its sovereign holdings since October 2024. The ceasefire announcement on April 8th sparked a rally past $72,000 with $427 million in short liquidations and over $2 billion in new perpetual open interest. The Coinbase Premium Index turned positive for the first time since October, signaling renewed US buyer engagement. The question is whether this narrow buyer base can sustain momentum and break through $73,000 resistance. Meanwhile, crypto regulation is heating up. Coinbase CEO Brian Armstrong reversed his position and now supports the Digital Asset Market Clarity Act after initially withdrawing backing in January. This follows Coinbase receiving a national bank trust charter from the Office of the Comptroller of the Currency. The Senate Agriculture Committee already approved the bill, but the Banking Committee hasn't scheduled its markup vote yet. Traditional banks remain the biggest obstacle, particularly opposing stablecoin yield provisions. Private credit markets are cracking under pressure. The $1.8 trillion market faces a refinancing crisis as loans issued at near-zero rates now come due when rates are 5 to 6% higher. Blue Owl Capital permanently closed redemption gates after withdrawal requests surged 200%, and Morgan Stanley's fund met only 45.8% of tender requests in March. This creates a late business cycle environment unfavorable for capital rotation into Bitcoin and risk assets. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.